All across the country, new apartment supply is a rarity these days, but not in Salt Lake City. Lots and lots of new apartments. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Salt Lake City update. It's a supply and demand story in Salt Lake City. Lots of new apartment supply, more than the metro could absorb. Let me show you some numbers here. Since late 2007, Salt Lake City has built nearly 6,300 apartment units. That's expanded the apartment base here by 9%. 9%. But in that time frame, only 3,660 units have been absorbed. And it's really not an economic problem here. Salt Lake City is among the nation's healthier job markets, but relatively speaking, it's just that Salt Lake City is at the tail end of an historic spike in new apartment supply, and it's just going to take some time for the metro to absorb all that. So as you might expect, more supply than demand means occupancy falls. Occupancy in Salt Lake City has traditionally been very, very high due to a lack of new supply, but as you can see on this chart, it's falling. Occupancy was around 98%, 98%, very tight at the end of 2007, and then it just started falling as new supply was popping up. But vacancies here have never became especially problematic. Occupancy fell as low as 92.4% back in 4Q 2009, and now it is back up to 94.7%. Most of that progress came in the first half of 2010, and growth has actually stalled out a bit over the past 9 months. But occupancy is tightening up enough that apartment owners and operators are starting to raise rents again. Same-store rental rates in Salt Lake City jumped 2.3% between March and June of 2011, and that brought annual effective rent change to 3%, but that's still nearly about a point below the U.S. average. And here's one interesting trend that we're seeing on the pricing side. Breaking down rent change by age, we see far more rent growth in older product. Apartments built in the 1970s raised rents 5.7% year over year, and it was 3.1% in product built in the 80s. But same-store rents are up less than 2% in apartments built in the 2000s and in the 1990s. And that gap contradicts the national story where top-tier properties have done better on the rent side. And so what's happened is with all this new apartment supply on the market, the other top-tier properties that are more established in Salt Lake City just haven't been able to raise rents very much due to the competition with the new supply. When we look at Salt Lake City's submarkets, we see the same trend played out. Again, in the national picture, top-tier submarkets have done the best, but not here. And here, it's West Valley City Airport area, an area with lots of apartments built in the 1980s. It led the metro for year-over-year growth in both occupancy and rents. Occupancy climbed 2 points, and same-store rental rates jumped 5.6% in the year ending June 2011. Now, for the metro overall, Salt Lake City is among the nation's healthier economic markets. And so it won't take much for the metro to absorb a lot of this new product that's on the market. And the good news is there's only about 1,000 units set to deliver in the next year. That's not an insignificant number, but it's certainly less than the big wave we've seen in the past few years. And so, as a result, we should begin to see that occupancy number climbing in Salt Lake City, and rent growth should kick into stronger gear as well. And that wraps us up for Salt Lake City. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.